What's going on, guys? Tyler here. In this video, we are going to start a public portfolio. This is going to be a series where I spend 15 minutes going through as many different stocks to add to a public portfolio to analyze them and see if they are worthwhile for our personal portfolios. The stock that I am starting off with is Palantir. If you guys don't know, this is like a very hot, high-tech company. They use a lot of AI for defense products, but they're a lot more than that. And it's hot in the public markets, and they just released earnings. I haven't read the earnings, so I figured we could do that one first. I'm going to go ahead and start the timer. We're going to have 15 minutes, and we're going to go through it pretty quick. So the first thing that I'm going to do is open up and create a public portfolio on the allgreeninvest.app, and then public portfolio of stocks covered in the 15-minute analysis. Okay, so I'm going to go ahead and start that portfolio, open it up, and we are obviously going to add Palantir stock. The idea here is to not create a like a portfolio that outperforms, but instead what I'm trying to do is get an idea of what an equal weight portfolio looks like of all of the stocks that we cover. So I'm gonna quickly do the math on what that would look like. So we have to do 10,000 divided by 102.41. So we would buy 97 shares of Palantir, and we're going to add that holding. Now I'm going to go ahead and exit out of this. And the reason why I have built this view is because this is going to be give us a strong idea of what our portfolio, what our collection of businesses is actually generating as if it were one business. For example, when we buy Palantir today, we are $10,000 worth of Palantir is going to get us $80 in cash. This is what our business bank account would look like. $191 of or $192 of shareholders' equity. We're going to be doing revenue of $110. Strong gross profit margin, gross margin, and then really not going to be making a whole lot here because our owner's earnings is only going to be $19.42. And we outlaid $10,000. So right off the bat, I can already tell that Palantir is expensive. So I'm actually just going to go up here and I'm going to make a note. Owner's yield on 10K equals $19.42. In parentheses, I'll just put that is 0.20%. So super expensive on that basis, but that's not everything. So the next thing that I'm going to do, I kind of already pulled this up here, but I am looking at briefing.com. This is a website that I use frequently. They do a great job of just providing the updates, but I like that they provide the updates in a summarized briefing for us. So let's just read over this together, and this should give us a good idea of what we're looking at. Okay, so this is a write-up by Briefing. Palantir Technologies surges. Let me zoom in so you guys can see too. There we go. Palantir Technologies surges to record highs on another quarter of impressive growth. Like Groundhog Day, Palantir surges 25% to record highs once again following an impressive quarterly report, surpassing earnings and revenue estimates in Q4 and projecting sustained upward momentum in Q1 and fiscal year 2025. Shares of the AI software developer whose roots begin with the CIA, were already up 400% over the past year, leading into Q4 numbers, pushing its forward earnings and sales multiples to sky-high levels of 158x and 50x. Wow. Okay. That's pretty nuts. However, Palantir continues to release outstanding quarterly reports showcasing their clear edge its AI software has over the field. Okay, so now we should get some numbers. Palantir has enjoyed a powerful AI-induced tailwind. Okay, the company's bottom line in Q4 marks its third straight beat, delivering EPS of 14 cents per share, its best quarter of profitability since going public in 2020. Similarly, revenue crushed consensus. And here's something that's important. In order for stocks to make big moves, there has to be surprise. The market runs on surprise. And that's why we saw this, up here, 25% move because of this surprise, right? So revenue crushed consensus. So that means that people were expecting revenue to be, let's just say 100 million or, whatever, 30% less than what it was. And here's another important thing. So I'm sorry, I read that wrong. It's not a 30% leap. The leap is 30% year over year to 827 million. But whatever the consensus was, they crushed it. So, and here's what's really important in growth stocks. This is something that a lot of people miss, and I'm going to share with you because I've experienced this on my end. The key to growth investing, and I hate using that term, but the key to getting these huge returns in high growth businesses is when you have revenue growth acceleration. It's not just like, having 15% growth or 13% growth is fine, but the key to getting very large moves has everything to do with the revenue growth acceleration. So if you are growing at 10% in 2025, and then you grow at 20% in 2026, and then you grow at 40% in 2027, that's revenue growth acceleration. And that's when you get those huge moves like Palantir. So if you're wondering how is this thing going and why is it happening, it's because of this revenue growth acceleration. And the reason why you have that happen is because you have all the geeks like me that have their, investing models up and they are punching in better than expected numbers constantly, and the revenue growth is accelerating. So they go, oh my gosh, like I didn't think that they could grow at 30%, and now they're growing at 36%. So that's how it works. So decent acceleration from the plus 30, plus 27, and plus 27 growth over the previous 3 quarters. U.S. commercial revenue has been underpinning Palantir's accelerating growth. Business spiked 64%. So this is important. Another thing that's important is, yes, a business segment spiked, but what is the total volume of that large growth? In this case, it's 214 million, which is sizable because their total revenue is 800. So 1/4 is growing at 64%. That's great. The company's AI platform continues to fuel new customer acquisition, driving 400% jump in U.S. commercial customers. That's fantastic. Okay, great. One of Palantir's goal for enterprise is to help build a self-driving company, allowing users to go from performing workflows to supervising AI agents. That sounds great. The company began working towards this goal. So they're automating bank back-end processes. I think AI automations are totally happening. I'm already using them in my personal business. So these guys are doing it at a massive scale, which is obviously attractive. So government business expanding by 40% year over year. Again, 340 million growing at 45%. Large volume. That's important. It's a lot easier to grow $1 million in revenue by 45% than it is to grow 340 million by 45%. Okay, so all of this looks awesome. So here's the big part. Q1 revs expected to be 860 million, let's call it, a 36% jump. And then fiscal year 2025 revs at 3.75 billion. It's a pretty tight window. I have a anticipation that they are kind of lowballing us there. Okay, so that was great. Everything was really, really strong. Let's just open up FinViz. Let's just quickly look at Palantir and open up where is the most recent filing. I want to look at the press release, which should be somewhere here. Okay, here it is. Nope. This is it. Perfect. I'm going to go here. Let's do new trading log, and let's just do another Augury public portfolio running out of time. Let's just start a balance of 100,000. Our target is to get to 200,000. So I'm going to open up that public portfolio, and let's also simultaneously go like this. Palantir. Okay, business is booming. Let's open up a watch list actually. Create a new, and let's do public portfolio. Okay. So now what we're doing is we're going to open up the public portfolio watch list, and we're going to add Palantir to our watch list. And what I'm really doing here is I'm trying to get an idea as to what is the value of Palantir. Everybody thinks they're going to grow at this insane clip. So let's be pretty nice here. And I'm going to go through the outlook, and I'm going to say that they're going to do 3.7 billion and PLTR. I just got to grab the shares outstanding. So they have 2 billion shares outstanding. And then let's pull up our calculator again, and let's do 3.75 divided by 2.06. So they're going to do $1.82 per share in revenue. Okay, we're paying 100 times sales. That's insane. So let's take that number, and then let's say that Palantir is they're never going to do this, but let's say that they are going to be a 30% profit business. Let's say 35% profit margin. So that's going to give us 63 cents per share in earnings. Okay, so follow with me. Pull back. What did I say? 63 cents. So our owner's earnings is going to be 63 cents. Our book value, let me just go here to the bottom. Oh, looks like they put it here. So they didn't give us the balance sheet. let's just see if we could grab it from the SEC filing. Palantir Q3. We don't need this anymore, so let me exit out of that. Now let's close this and then zoom in. So I'm finding the shareholders' equity. All right, we're going to go over time, unfortunately. 15 minutes. Everybody knows the rules. Okay, so they have total equity of $5 billion. Let's pull up our calculator again, and we'll remove the revenue, and we'll put 9.4, and then obviously get rid of this. So this is going to give us our book value per share, which is $2.47. $2.47. Okay, now here comes the growth stage of things. So let's go back to finviz.com, go to Palantir, and let's see what type of growth are analysts expecting going forward. And we can see that sales, they have earnings next year of plus 27%. And they don't give us forward-looking sales, but let's use that growth rate of 27% just to see what the market is valuing this thing at. And that's what's pretty crazy here, is if we grow revenue at 27% over the next 10 years, then the stock is worth $36 a share. So let's say, what if we grow revenue by 27% over the next 20 years? It's still overvalued, like heavily overvalued. I mean, at $81, and you're talking about 20 years of average growth of 27%. So I think something like this is probably more realistic, where they're going to grow at, let's just say they grow at 40%, and then basically growth falls off for, I don't know, man, like down to 8.5%. So I feel like a lot of the growth is going to be front end, and it's going to be huge. Like, it's going to be huge revenue growth like we're seeing now. So that's what I'm going to do here is I'm going to say, let's say this is a long-term hold. Let's look at it as a long-term hold. So let's just add, typically I like to say 4 years. So we'll go February 5th, 2029. And our entry price is 102. So 102.12. Now here's how this watch list feature works. So you're not going to try to, you want to try to be right. Like I'm saying, like I think this is what it'll look like. So my price target 1 is going to be $67.43. I think there's a 30% chance of that. Now let's just, go from there. What if they do? Let's say they do 50, let's say they end up doing like 55% over the next 5 years. And then I'm wrong, and over the next 15 years, they actually do something like 12%. Let's do 12.5%. That gives us a $75 valuation. So $75.49. And let's just say we think there's a 15% chance of them doing that. And then let's just do something absolutely crazy, which is them doing something like this. And then the stock would be undervalued, which I think that this is very unlikely, but maybe. Okay, so let's say there's a 5% probability of that, which, maybe my thinking is so wrong and I'm so off by this, but it's so expensive. It's a $233 billion company. Okay, and then stop out. typically what we want to do is like, what is the worst case scenario? And the worst case scenario for something like this is like, okay, let's say they do only grow at 27% for 8 years, and then for 12 years, I definitely think that these guys are going to, probably grow at a strong clip. But let's just say worst case scenario is that they grow at something like this, where, the next 8 years are great, and then the next 12 years are also great. 8.5% growth for over 12 years is also great, but it's hard. Okay. Other people are out there, and this is kind of what I'm going to get into this in a second, but let me just put point of risk is 48. Let's say there's a 50% chance of that. Now, what if they do grow at 30%? Let's just say for 30 years. This is the ultimate goal. Maybe it is a multi-bagger, right? Maybe that is a possibility. They've already started this, though. So let's just say that they grow at 30% from 2020. So take off 5 years, so 10. It's still only a double. And that's basically what we have here. So the goal for every business should be to grow at 30% for 30 years. If that's, I feel like, what everybody is. If you want to get rich, you can, and you do that, that's it. So the situation is leading tech, period. Like, these guys are leading the way. And what is important here, what is important with a business like this is the manager. If you are paying up for Palantir, you must believe in the CEO. And for you guys that don't know, Alex Karp, this is Palantir's CEO. I'm gonna link a video on him. He's a very interesting character. He seems like a pretty smart, ambitious. He talks a lot about ethics and morals, and as he should, he's building a company that has technology that takes people out, the bad people. But he has built this culture around Palantir that is so interesting. So I'll just put here Alex Karp, watch and study. And my thesis is like the market is too high on Palantir for a safe investment. But if the market ever turns its back on Palantir, I would consider purchasing tech plus, and I've already studied the CEO are attractive, but cost to own is extremely expensive. In terms of making a wager on the future. Okay, cool. Now we're going to add that to our smart watch list. And what's going to happen here is when the market opens, we're going to grab, or the software works even without the market being open. But you can see here that we have an Augury score of 0. That means that it is not fit for the portfolio at this time. And as we build out this series and we build out our watch list, what we're going to see is this watch list is actually going to tell us what stocks, what investments are the best for us at any given moment in time. So I hope you guys enjoyed this video. I hope you guys enjoy this series. If there are any stocks that you want to see me cover, please let me know. I will see you in the next one. Peace.